All right, everybody, welcome to our S&P 500 live stream. This is our Forex weekly analysis, everybody, for S&P 500. I'm super excited that you all are here. I see a few people on live with me. Again, I want to welcome you to my channel. Hopefully by the end of this, you are intrigued to like and share, subscribe. So we're going to get started. I'm going to go ahead, and we've been doing these S&P weekly live markups for over a year now. So almost 2 years we've been doing this S&P weekly markup. If you're interested, you want to click the information below in my bio, and you want to go to the website. You want to go to ragstoriches.com. Hello, Miss Elizabeth. I can see you all live on YouTube, so thank you. Thank you so much for attending. Over time, you guys, this is going to explode, so stay with me. Again, a lot of you all are already my students. A lot of you all are already a part of Trading with Rags to Riches community. So you know exactly how we do these markups. The best part is you all get to see them live now. So without further ado, I'm going to go ahead and show my screen with you all so that you can see what screen we're using. And hello. So again, make sure you visit ragstoriches.com. Okay, the information and the link is below in the information section. From there, you will see the Forex information, from Telegram groups to courses to free resources. And I look forward to servicing you all. I look forward to helping you all grow on your Forex journey. Okay, so again, let's rock and roll with our Forex weekly analysis here for S&P 500. We are using TradingView, just in case anybody is new to Forex and unfamiliar with what platform we are using. This is TradingView. It is a free web-based platform, and it is my go-to. Yes, I use MT4 and MT5, but for a easy, user-friendly version, TradingView is the GOAT. Okay, TradingView is the GOAT. Now, you want to make sure that you are looking at S&P 500. This is an index, which is a CFD, not a currency. All right, it is the top 500 U.S. stocks in the U.S. Okay, so we get to trade the accumulative of those 500 stocks. Those 500 stocks in a bulk have a contract for difference value. And we are going to mark that up because on the Forex side, if you are trading with an unregulated broker, then you get to trade this on the Forex side. If not, then you need a regulated broker so that you can trade the contract for difference, okay? Or you have to trade it on the options market, or you have to trade it on the futures market. All right, so with that being said, I roll with the top-down analysis first and foremost, because if you don't know where you come from, you don't know where you're going, okay? And we don't want to be lost out here in these Forex streets. So the charts are already marked up for you guys. However, I'll explain to you what you are looking at. And currently what you see is the daily chart. And we have an extremely bullish S&P 500. All right, so here my red lines represent the weekly structure. All right, and within that weekly structure, Okay, within that weekly structure, you have a daily structure. You have a 4-hour structure, a 1-hour structure, a 30-minute structure, a 15-minute structure, a 5-minute structure. And if you just behoove yourself and you like to get a little risque, you can trade the 1-minute structure as well. We focus on the daily structure. Once all the structures are marked up, we focus on a top-down analysis with the daily structure, and we ultimately end around the 1-hour structure to identify entry points and potential exit points. So again, our weekly structure is very bullish, and therefore if our weekly structure is bullish, we have recently, as of October 27th of 2023, we have recently started to transition into back into that bullish structure. So this was the pullback of your weekly structure, and now what we're looking at on the daily is a continuation of that weekly structure and the daily structure. Okay, so hopefully that gives you some idea of where you are in the market. You must know where you are. If you don't know that you're in an overall bullish trend and you're looking for sale opportunities and you're getting stopped out every 5 minutes, it's because you're going the wrong way. Now, with that being said, we're going to go down to the 4-hour chart. And on the 4-hour chart, which is represented by my green structure, we also get to look at the continuation and pullbacks of the 4-hour structure as well. So as you can see, the market impulse to the upside between that October 27th and November 6th, it pulled back from around November, I have it here at November 6th, but really around November 9th, it pulled back, and then it also continued from there. And here we are in a very impulsive continuation move of the S&P 500. With that being said, this is the 4-hour structure. So we are looking at something more like this. I'm going to redraw it for you just to give you all an idea. Here's our 4-hour. Market impulse to the upside. It pulled back for literally a few hours. It continued on that trend for the next several days from Friday, November 10th. All right, and we did not get a huge pullback either. So eventually we will. Right now, we do not have that. The sentiment of the market is also very bullish because there is no fear in the market right now. The market is very optimistic. So then once we understand where we are in the market in relation to the higher time frames, you want to start paying attention to your structures. Your structures are going to show you where the market is headed and where the market can potentially pull back. So we have our supply and demand levels, aka support and resistance levels. Okay, so the market came back. Usually we expect the market to at least pull back to the previous high. Well, the indices tend to be very volatile. All right, very volatile, and they will continue to push with hardly any pullback in the market. Okay, so that can throw a lot of traders off, which is why it's really important to always be trading in the right direction. So now what we're going to look at, we have an impulse on the 4-hour with this minor pullback and an impulse to the upside. I'm going to do you all a favor and throw my handy dandy fibs on here, and I can tell instantly that we are headed to the negative 61.8 at least, which is near the previous high. One of the things I want to point out to you, if you did not know, fibs are not, they're zones. All right, let me repeat that. Fibs are zones. Fibs are not a definitive price that the market will absolutely always touch and reverse or continue. They are zones. So if you notice how the 61.8, negative 61.8 is near the previous high of our weekly back in July of 2023, I'm sorry, July 27, you will see that price is heading right back near that zone. And I'm actually going to shorten that zone because it's a little too big. Okay, and price is headed right there. With that being said, now we want to go down to the 1 hour structure. And here on the 1 hour structure, we want to take that last leg and we want to mark this off. So we can see we impulsed past the previous high. We didn't get a major pullback. Impulsed did not get another major pullback. So this shows you that the trend is extremely, extremely strong, and therefore any sale opportunities are extremely short-lived. If anybody got caught in a short position, don't feel bad, because the market definitely showed things such as divergence. It showed what do you call it, overbought, you know, that the market and price was in overbought territories. However, due to market sentiment being very optimistic, the indices they're on a bull run right now. All right, they're on a bull run. So just said a mouthful. If you caught any of those gems, pat yourself on the back. If you did not catch any of those gems, I need to be your mentor, and you need to know what's going on in these Forex streets. Okay? So with that being said, where are we now in the market? Because that is the point of these weekly markups for S&P 500. Where are we in the markets now? So we're going to mark this area as a it is a demand zone. Sorry about that. As a demand zone. So the market has previously pushed past the previous high as of today. All right. As of today, price has pushed past the previous high. Where is our previous high? Right here. All right, let's make that real big and pretty for you. Okay, there is our previous high. So since the market has pushed past the previous high, it will go a distance beyond that high. How far will it go beyond that high? Let's see. Price will go approximately in this zone or this zone. So we are looking at some futuristic zones right around here. Okay, we do not have any previous price action in the vicinity of these zones unless we go all the way back to July of 2023. But just to give you all an idea, we're going to mark this as our supply zone, and we already have one here. Okay, let's undo that. A lot of people are not a fan of fibs, but that's because they don't truly understand them. Once you understand them, they are literally like the eyes you wish you had in the back of your head. Okay, and it's not just about, you know, percentages on the screen. It's truly understanding the scientific dynamics of, you know, space and around you. Okay, and the same thing applies to the market. So price, if you ask me, is headed first to this zone here. All right. And do you have an entry right now? You don't currently, because the market moved today. So if we are looking for another entry, we're on the 1 hour chart. The 1 hour is a really good area to intraday trade. The 15-minute would be also a good area, a good time frame to intraday trade as well. Also to scalp it. You have to know what you're looking for. Obviously, we're looking for pullbacks in the market. So on the 1 hour chart, I'm looking for swing patterns, okay? Patterns that look like, she says I'm in these Forex streets. Yes, ma'am. So patterns that we are looking for are swing patterns, okay? They're going to be 3 bar patterns that look like morning stars. Okay, usually look like a morning star. You can also find the flat bottoms. All right. You can also look for flat bottoms in this market. If you are on the 15-minute chart or the 5-minute chart, you can also look for W patterns. Okay, everybody knows what a W pattern or a double bottom pattern looks like. That's what you can look for on these smaller time frames. So in order to catch the move, you need that confirmation. Now, let's see how many pips if this candlestick pattern was to turn into a 3-bar pattern, because right now it is already setting up as a 3-bar pattern, but is not confirmed because we still have 42 minutes left on this candle. So let's just assume, all right, hypothetically, this is not an opportunity. This is for educational purposes only. Let's just assume that turns into a 3-bar pattern. You are about 120 pips, okay? You're about 120 pips from this take profit, all right? And you're about 12 points from it as well. All right, 12 points as well. Okay, so that is where we are currently in the market, but nothing is confirmed, and it doesn't mean the market can't pull back further even if you get a 3-bar swing pattern. Now, because the market is extremely bullish for this week, I would continue to look for buy opportunities. All right, I would not look for sell opportunities simply because the market is not pulling back heavily. Anybody who may have been able to catch a pattern here, let me just see how many points or pips you were able to catch off of a move like this. Let's look at an entry here. That was 19 points or 190 pips. I'll let you do the rest of your calculations to see if that was worth the move. All right, if you're a scalper, perhaps. And it's going to be the same way across the board. Okay, once you got that confirmation of an entry, the 2 entries that I'm looking at is this swing pattern here after the close of this 3rd candle, and after this flat top pattern, the close of that candle. They're both about the same. Okay, not interested in sell opportunities in an extremely bullish market. All right, I'm also not